Louann Lofton, Warren Buffett Invests Like a Girl, and Why You Should, too. Embark upon a journey through the remarkable investing techniques of Warren Buffett, the world's most successful investor. In the book Warren Buffett Invests Like a Girl, and Why You Should, too, author Louann Lofton reveals how Buffett's success can be attributed to traits typically considered feminine, such as patience, thorough research, and risk aversion. The summary will indulge you in critical insights into the investing styles of both genders and their impacts, divulging the ins and outs of Buffett's life, influences, and timeless principles that have led him to astronomical success.
The unemotional and skeptical investor. Warren Buffett's success as an investor is attributed to his unemotional, skeptical, and patient nature. He avoids risky investments and conducts exhaustive research before selecting any stock. During the 2008 stock market crash, he remained calm and invested $20 billion in bargain-priced stocks of famous corporations. He buys low and holds onto his stocks for a long time. Buffett's temperament is the opposite of overconfident male traders who trade too often and take undue risks. His approach to investing maximizes each dollar for the best possible place. Women as successful investors. The book highlights that Warren Buffett's investing style is similar to female investors. Females tend to buy stocks when they're certain it's the right move. Females are more patient, collaborative, and spend more time researching their stock picks. They also don't trade as often and avoid risks that men accept. According to neuroeconomics and behavioral finance research, females exhibit a variety of useful investing tendencies that make them successful investors. This is because testosterone doesn't drive women's decisions, resulting in less risk-taking. The book highlights that these traits are the ideal traits for any investor. In fact, females often outperform male investors, and the hedge funds managed by women do better than the ones run by men. However, male or female, no one invests more successfully than Warren Buffett. Warren Buffett's journey. Warren Buffett's journey is an inspiring story of a precocious young boy fascinated with numbers and making money, who later became one of the greatest investment geniuses. The story starts with Buffett's childhood, where he was exposed to investing by his father, from whom he learned valuable lessons. Later, Buffett attended Columbia University's business school, where he met Benjamin Graham, who became his mentor and inspired him with the philosophy of value investing. Buffett later embraced the philosophy and decided to become a value guy. Buffett went on to work as an analyst for Graham at the Graham-Newman Corporation. However, after Graham retired, Buffett moved back home to Omaha and established his own investment partnerships, which made him and his investors huge profits every year. In 1969, he closed the partnerships to focus on Berkshire Hathaway, a textile company he had purchased a few years earlier. Later, he transformed the company into an investment holding firm, which now owns many companies, and he did this with his lifetime business partner, Charlie Munger. Buffett's journey reminds us that embracing risk, learning from mistakes, and being true to your philosophy are the keys to succeeding in investing and business. Warren Buffett's investment style. Warren Buffett's investment principles, including relying on feminine influences, are presented in this book. From his late wife to influential women, such as Sharon Osbourne and Katharine Graham, these women have greatly impacted the way Buffett invests. Additionally, Rose Blumkin, known as Mrs. B, who founded and ran Nebraska Furniture Mart in Omaha, was also an important figure in his career. By embracing feminine influences both personally and professionally, Buffett has created a successful investment strategy that has stood the test of time. Investing for the long haul. Warren Buffett believes in holding on for the long term. He suggests that investors think of their stock purchases as owning actual companies with dedicated employees and managers. To discourage short-term trading, he once recommended imposing a 100% tax on profits from trades made within a year. Buffett advises investors to limit their stock purchases and approach each one as a potential lifelong commitment. Buffett's investment philosophy. Warren Buffett's investment philosophy centers around fully understanding the companies he invests in, and he avoids investing in technology firms he can't comprehend. He believes that estimating a firm's future prospects is critical in investing, which is not possible for technology companies, leading to his exclusion of such companies in his portfolio. Ultimately, Buffett recommends not investing in businesses you don't comprehend to ensure informed investments. Buffett's margin of safety. Learn from Warren Buffett's investment strategy and limit your risk through the margin of safety concept. This involves calculating the difference between a firm's perceived value and its current trading value and considering a safety margin of 40% to 50% before purchasing stocks. By following this approach, investors can minimize the chance of losing money while maximizing their potential for profit. As Graham taught Buffett, investing is always a risk, but smart investors can use these concepts to invest with confidence. The silver lining of bad news. Acclaimed investor, Warren Buffett has long been a proponent of buying American. In a piece for the New York Times, Buffett outlined his optimistic viewpoint that bad news can provide excellent opportunities for investors. To be a successful investor, one should be able to spot opportunities in tough financial periods. In the words of Warren Buffett, bad news is an investor's best friend. It lets you buy a slice of America's future at a markdown price. Smart investing tips. Take a cue from Warren Buffett, who never invests in a company without performing extensive research. Check the firm's products or services, competitive position, management team, and any outstanding features that differentiate it from others in the market. Nowadays, with the internet, this task is simpler compared to when Buffett began. He used to check financial reports with the Securities and Exchange Commission, Moody's, and Standard & Poor's and visited the company's offices to speak to their senior executives. It's always wise to accumulate necessary information before making an investment decision. Invest like Buffett. Warren Buffett's value investing philosophy has kept him successful as he avoids bubble markets. To succeed in investing, adopt his independent mindset, do proper research, and select stocks based on their value. Learning from Buffett's investment blunders. The legendary investor Warren Buffett admits to making mistakes in his investments, but his approach is to learn from it for the future. There are two types of errors when investing: mistakes of commission and mistakes of omission, the latter being the cause of more regret for Buffett. One such blunder was not investing in Walmart at a certain price, which cost him $10 billion in unrealized profits. Buffett's approach is to admit the mistakes and gain knowledge from them rather than dwelling on the losses. Buffett's reliable investment system. Learn how Warren Buffett's value investment system consistently achieves unmatched returns and how you can use it too. Starting at age 25, Buffett has achieved 32% average annual returns for his initial partnership and a 20.2% compounded annual gain in per share book value from 1965 to 2010 at Berkshire Hathaway. Discover his formula for investing success and apply it to your own investments. Investing in people. Warren Buffett emphasizes investing in a company's people to maximize returns, prioritizing long-term growth over short-term gains. He believes that a firm's value is determined by its executive team and stays invested in companies with leaders he respects. Buffett's strategy demonstrates the importance of foregoing incidental profits to stay invested in a successful team. By emphasizing the people behind a company, rather than solely focusing on its competition, an investor can achieve long-term success. Buffett's adaptation. Buffett's investment approach is adapted from Graham's philosophy of value investing. While Graham's focus was on bottom-line value, Buffett delves deep into a company before purchasing its shares. Warren Buffett highly respects Benjamin Graham's value investing philosophy, but he adjusted Graham's investment approach to fit his style. Graham considered investing as a numbers game and solely focused on bottom-line value, not caring about the actual companies, their leaders, or market position. Graham regarded purchasing a company's shares at a price less than his evaluation suggested as a promising investment. Buffett, on the other hand, seeks to learn everything about a company before buying its shares. Buffett has always learned from Graham's philosophy but has been open to thinking and acting independently. Ethical investing with Buffett. In his book, Warren Buffett emphasizes the importance of fairness in investing. He challenges the traditional, selective disclosure policy, where big institutional investors receive more benefits than small investors. At his company, Berkshire Hathaway, they do not give earnings guidance to analysts or shareholders. Buffett's approach shows that ethical investing can lead to wealth.
Discover the remarkable attributes that made Warren Buffett the greatest investor of all time, which, interestingly, are behaviors commonly displayed by female investors. By learning from Buffett's journey, values, strategies, and mistakes, we can take a step closer to emulating his unique yet effective brand of investing style. Embrace the power of patient, informed decision-making without succumbing to the impulsive, risky tendencies that can plague other investors. In the world of finance, remember that adopting a practical, empathetic, research-driven, and gender-neutral mentality can lead to unparalleled success.